Happy Monday, traders, and welcome to a fresh week in markets. Okay, so what's going to move markets to start the week? Well, there's two things that's going to start us off. One of those is what happened to US CPI on Friday. So we did have monthly CPI come out. Market was expecting so the headline number and also the core headline number year on year to come out at 3.1%, both of them. And they came out marginally below expectations at 3%. So market loved that. We do have a Fed meeting Wednesday US time, Thursday morning Aussie time. Market has priced in pretty much a slam dunk that the Fed's going to cut rates by 25 basis points, but also another cut in the December meeting. So obviously, when they see CPI, they don't want to see CPI spike, because if it does, then obviously it's going to put those rate hikes potentially in jeopardy. That did not happen. So what equities loved, the marginally lower CPI, and they did what they are very good at doing, and that is go up. S&P, NASDAQ, new fresh record highs. They were up both around about 1% on Friday. So we finished the week bullish, risk on trading. Very hard to know exactly when this bull market for equities is going to end. So certainly, trying to fade, pick tops does not work. Okay, so the second thing that's going to be moving markets, and it's also another thing that's going to be risk on, is that there were high level talks in KL, in Malaysia, between the US and China. With regards to trade. A lot of positive headlines, lots of them, and it's pretty obvious, look, a deal has been made, so it looks as if China's going to probably relax some of the export controls and rare earths. They're going to buy lots and lots and lots of US soybeans, which is going to make Trump happy. And on the US side, it looks obviously as if that some of the tech and the chip sales to China will go ahead, and obviously those 100% tariffs November the 1st are not going to happen. Now there is going to be a high-level meeting between Trump and Xi. It's on Thursday. It's in South Korea. So obviously they're going to cement that deal, and we're going to get more headlines, about how close and happy the relationship is now. In any case, though, it is going to drive risk higher to start the week. We've already seen Aussie gap open higher. Obviously Aussie is a China trade. Anything good that happens with China, it goes higher. Obviously risk trading higher, Aussie goes higher. So Aussie's got some tailwinds behind it, and yes, bias is to probably stay long Aussie. There's no real reasons to be selling that at the moment. Okay, so this is a big week. There is a lot going on. It all really kicks off on Wednesday. Wednesday we do have all important quarter 3 CPI released in Australia. That's important because we do have an RBA meeting the following week, Melbourne Cup Day, on November the 4th. And the market, since they've seen the last employment number, has driven up the odds of an RBA cut. 70% chance that that's going to happen. But obviously, really needs CPI quarter 3 to behave itself. Last quarter, the RBA trim mean, and that's what obviously the RBA focuses on, and also the market focuses on, came in around about 2.7%. The monthly CPIs since then have all gone up, so I'd imagine that number is going to go up. Just how high, and whether or not it starts to spook the market about their RBA bets could be too high. Let's see. But anyway, certainly that's going to move market, and I'd imagine, look, it's probabilities is it's probably going to come out higher than below expectations. So probably another reason to be long Aussie. But anyway, Wednesday. Obviously also have the Fed meeting, also a Bank of Canada meeting before the Fed. They're expected to cut rates from 2.5% down to 2.25%. They may be at their neutral rate then, but anyway, 25 basis points there. And the Fed from 4% down to 3.75% afterwards. So 2 rate cuts in North America coming our way. No doubt market, they love rate cuts. So let's see how that pans out. Thursday though, more central bank meetings. We've got a Bank of Japan meeting. Bank of Japan has done nothing all year. They're sitting at 0.5%. At some stage they need to go higher. Everyone knows that. It's just when. And at some stage, one of these meetings is probably going to come out more hawkish, preparing the market for a potential next hike. Will it be this meeting? Who knows? But at some stage, they are going to surprise the market. And then on Friday, we've got one more central bank meeting, and that's the European Central Bank. They are basically looking at being on hold at 2%, and the ECB is pretty much at neutral rates. So potentially, they could be a touch more hawkish at this meeting. With Fed cutting, ECB at neutral, maybe long euro this week could be a decent currency trade. So yes, look, there's a lot going on. And then also in the equity space, we still have Q3 corporate earnings season. This week we've got all the big tech names. I can't remember a last earnings season when tech went lower on earnings, even though the market obviously gets a little bit nervous before they come out. But again, they haven't disappointed for quite some time. But again, that's something that really could push Nasdaq and S&P higher again. But look, key takeaways is we are starting the week risk on trading, bull markets. And there's a lot on this week, and a lot of it is definitely biased towards the bullish side again. So anyway, good luck with your trades, and we'll catch back in with you shortly.